Good evening, students. Just like provision for depreciation on fixed assets, there is another asset which is called the debtors. Debtors, that's the customers who have to pay the money in future, those who purchase goods on credit basis. For them also, we have to provide some provision. We have to provide some provision for doubtful debts. For example, all the debtors are not good debtors. Some debtors are bad. Some may be the doubtful debtors. So for these doubtful debtors, we have to create some provision. In order to show the heavy loss, we can provide some. We have to create some provision for this doubtful debtors. Now let us see. There are 4 types of treatment we have to do in this regarding this provision for doubtful debtors. Now let us see here. There are debtors for the year for rupees 2,50,000 in the trial balance, and some debtors are doubtful in nature. Therefore, a provision of 5% of the debtors is to be created for doubtful debts. So, these doubtful debtors may be a good debtor in the next year. At present, we are in dilemma whether they are good debtors or bad debtors. We are providing some provision which is called the provision for doubtful debts. Now, there are 4 treatments. Show how it will be treated in accounts. Show the journal entry and ledger posting. Position in the profit and loss account. And treatment in the trial balance. Now, let us see. In journal entries, we have to provide like this. That is journal entry provision for doubtful debts, journal entries, date column, particulars column, LF column, debit column and credit column. Here we have to debit the profit and loss account and credit the provision for doubtful debts. Debit profit and loss account, provision for doubtful debts. Now let us say from this problem we have to calculate 5% on 2,50,000. Total debtors are 2,50,000 and 5% doubtful debts doubtful debtors are there. We are creating a provision for them. Cancel 0, 5, 2 zeros, 12,500. Rupees 12,500 we are creating provision for the overall 2,50,000 debtors. Now the journal entry, this is a date column, particulars column, LF column. The profit and loss account is debited with 12,500 to provision for doubtful debts. This is the journal entry. Date we have to write here as 2018 March 31st. Now the provision for doubtful debt, this is a ledger account. In this ledger account, we have to post it. This is debit side, this is credit side. Here one column is there, JF column. We can call it as F column. Here one column is there which is called a F column. Now provision for doubtful debts, it's in credit side. We have to write it in the credit side. Date 2018 31st March. How much we are creating? Here we are creating doubtful debt account is credited by profit and loss account 12,500. 12,500 we are writing here. This is a F column. That is a JF column. This is F column. Like this we have to write in the end of the year. We have to balance carry down 12,500. It is 2018 31st March. Okay. Now we are going to take this to the this is the total, because we are entering in the end of the year. And next, how it will be shown in the profit and loss account. This is the profit and loss account. Profit and loss account as on 31st March 2018. 2018. Now these are the particulars column. Particulars column. This is amount column. Amount column. This is CR side. This is DR side. Here profit and loss account is debited because it may be a future loss. All expenses and losses are debited to the profit and loss account according to the nominal account rule. So we have to write here to provision for doubtful debts. How much you have created? 12,500. Okay. Now what is treatment in balance sheet? Balance sheet, this is a liability side. Amount. Asset side. Amount. Let me draw the line. Here all the assets are there. Fixed assets and current assets. Now under current assets we are getting the this is fixed assets, this is current assets. Under current assets we are getting the debtors. Debtors 2,50,000 minus provision for doubtful debts. 12,500 balance 0, 0, 5, 9 minus 2, 7, 3, 2. 2 lakhs 37,500. The good debtors are 2,37,500. Like this, reserve is also created. Reserve is created in order from the profits earned by the capital. That reserve is created in order to develop the business, in order to meet some future assignments. Whereas a provision is a charge against the loss or expenses. So this is a provision created. This is doubtful debts only. This may be a good debtor or bad debtor only the next year. They come to know the next year. Okay, this is the reserves and provision. Reserve is meant for the creation of the asset in order to fund, in order to develop the business. So provision is a charge against the profit and loss account. Charge against the expenses which we have to meet. Provision for bad and doubtful debts, provision for depreciation, provision for taxation. All these are expected expenses which we have to meet in future. Future liabilities. In order to meet the future liabilities, at present, from the present profit, we are creating one reserve. We are creating one provision. This provision is according to the law of conservatism. We have studied in theory lesson, accounting theory lessons, principles, according to the principles, accounting principles. Law of conservatism makes the business organization to be in the safe side. In order to meet the future contingencies or future liabilities, they will create provisions such as a provision for depreciation. Why they are providing depreciation? In order to, at the time of the disposal of the asset, that provision money is the depreciation which is provided will be used for the further future purchase of another new machinery. So, in order to purchase a new machinery, the depreciation for provision is created. In order to protect the business from the loss, the provision for doubtful debts is created. In order to, this doubtful debts may be a good debt in future or maybe a bad debt. That time when it considered as a bad debt, that time it will be a write-off. It will be treated as a business loss. Like that, provision for taxation is also created. That is, the paying tax is a must to the government. So that provision will be created in the business organization. So the provisions and reserves, you have to know the difference and have to read from your lesson. Thank you. We'll see in the next video.